Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, investment demand far outstripped gold jewellery demand in 2009. Fields CEO Nick Holland says he is open to asset consolidation with Anglo Gold. And new aspirant South African investors are seeking physical gold and uranium. For the first time since 1980, the investment demand for gold last year far outstripped the demand for gold jewellery, culminating in a bull run in gold stock investments. GFMS CEO Paul Walker reports that the gold market was buoyed by the investment sector.
Gold's actually done remarkably well. The onset of the global crisis saw an unbundling of a whole lot of asset classes, sell off across the commodity spectrum, and gold was caught in the crossfire. Did fall quite significantly for a while, but in 2009 it staged a comeback and has performed especially well on the back of investment demand. I think you could easily see the gold price spiking to $1,300 by the end of this year. We feel there's going to be a strong follow through when people realize that the economic data that's now coming out that looks particularly positive, when they realize this is almost certainly going to be short-lived, there'll be a new spurt of investor activity in gold, and absolutely wouldn't surprise me to see prices pushing to $1,300.
Fields CEO Nick Holland says that he is open to discussion on gold asset consolidation with Anglo Gold Ashanti in order to accelerate the mining of reserves and to help stabilize the local industry's ongoing value erosion.
Asset to asset, there are opportunities, certainly on the Westfords there are opportunities for consolidation. For example, Driefontein is adjacent to the likes of what used to be called Western Deeps, part of Anglo Gold. I believe there are opportunities there. I'm sure Anglo Gold, Ashanti believe there are opportunities. And I'm open for any kind of discussion or debate where individual assets are adjacent, contiguous to each other. There's an opportunity to accelerate reserves. That's the kind of thinking we need in this sector. And that might be something that helps to turn this around and give us more stability going forward. So I'm open to the discussion, and I'm sure that the other players in the sector are thinking the very same thing.
DRD Gold CEO Neil Pretorius says there's a growing body of new aspirant investors in old South African mines that are keen on securing direct access to physical gold and uranium, irrespective of the cost of difficult deep-level mining.
There seem to be a growing body of investors out there who are not too concerned about the actual how difficult it is to extract gold and how much it's costing to extract gold within the current climate, because their key objective is to take direct exposure to actual physical gold that's unlikely to ever be sold through the existing channels. In most of these mines, and in ours in particular, there's the possibility of uranium. And once again, there are people out there who take a 10, 15, 20-year view, who look back into history and see that there were uranium plants on most of these mines, who ask you for your residue tailings, your tailing samples insofar as gold and uranium is concerned. So they see at what sort of rate are you stockpiling what they perceive to be a resource, who's not looking at doubling his money in 6 months or a year, but is looking in taking direct exposure to both the real currency, gold, and to what could potentially be strategically a very important mineral or resource to own in the energy arena.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.